This is askSlim Live, April 26, 2023. Information and support for traders and investors in a time of crisis and beyond. Little legal cleanup we have to do here. It says all the information at askSlim is for entertainment and educational purposes only, not to be construed as investment or trading advice. The sole purpose of this website, any oral or written presentation, anything we do in video, anything that we present to you at all, is to provide information that possibly could be used by a person or entity in discussions with investment advisors and or investment decision makers. This does not substitute for advice of an investment advisor. Consult your own trading plan or your financial professionals before making any investment or trading decisions. Our live events are being held for support for members, not part of the memberships, been created for times of special needs. Note these events are likely to be recorded, offered on the askSlim website and at times public viewing. This one is being recorded. We'll always act in ways to protect your identity. Still, we can't guarantee that. So participating in this event acknowledges that you understand and agree. And you can get all of our terms, disclaimers, full legal information at askSlim.com. This is our team contact info. If you want to take a little click of this, especially if you're brand new, with a contact for different reasons that you may want to speak to any of us. So you can see all that right here. And the whole analytical team is here, all four of us. And as I always continue to say, I think we're the best overall analytical team with the broadest knowledge that you will find anywhere. All right, this is our agenda for the day. I'm going to give you a market brief, which is going to be a little more than a brief as we look at the situation in the market. Matt's going to share a brief update with you and a demo of important new features that have been added to the most recent version of the MCM, the Market Condition Monitor beta. And in the express round, all four of us will be answering your questions on services, trade planning, chart analysis, trading issues. The floor is yours. Interestingly, I say trading issues, but I don't think there's been anybody that's been asked us a question about their trading issues in months. So the door is open for that. Want to remind you that if you have questions about website or your membership, or any questions about how upgrades, things like that, please put that in the chat. Questions on our analysis or anything that you want analyzed, please do put that in the Q&A. All right, I'm going to bring you analysis on the S&P 500, Nasdaq, and the Russell, and look at the sum of the evidence. We had M. Ford on here commenting that this is a market that he says is a clown market, but now he's commenting that he's old enough to know that he has seen crazier times like I have also. So that's true. This is, I don't think it's all that crazy now. There are a lot of cross currents going on. And this typically happens at a time when you're in earnings period. And also we have a time that is affected by a lot of externals, the geopolitical issues, the problems in the small banking conditions, which are really showing their head again. And I was commenting to the team just a little bit earlier, we've been showing you a 33-week cycle that has been kind of overlaid on the S&P 500 cycle that was more reflective of the Russell and also the European markets. And that is really coming into play right now. I think it's really important, and I'm going to show you that, and you can see how that is influencing the market. Also, the daily chart is a little bit longer, but over the cycle pattern is a little long, but over the period of months, it's really not that far out of line right now, and it's not yet at a point where I would be really doing any major review of the cycle lengths. That could happen if the stock market keeps falling over the next few days or a week. That would really have me looking hard at how it's changing, and you'll see that as I put these charts up. So we're going to start now looking at the S&P 500, and I'll just blow up this to the weekly chart. So this is the S&P 500, and you can see in here that the cycle in the S&P 500, the dominant cycle is right in here, and that's where it made the low right there. So it made the low, a little bit earlier, on the earlier side of what would be the normal ideal cycle, but really perfectly located in the support zone right there. Let's just backtrack just a little bit, because back when this market made its big break over here and fell down into October, which was well projected by us, we were unsure whether or not the next cycle right in here would come down and take out that low. And we had been rating it at a pretty good percentage. But then as the market took a longer period of time coming up in here, and the translation of this cycle was telling us that things were changing, we had upgraded that. We had said it was less likely, until finally we had a note in here for a long time that said getting down there was a low probability, as you could see right over there. And so we learned from the movement in the cycle, especially from as the minor cycle became was in this positive translation, positive configuration. It told us that this next minor cycle would probably take out this high. That being the case, we could extrapolate that the configuration was going to be positive, and it was not very likely that the market would make a new low. Now, that said, the Russell was in a different shape, and the Russell had this longer cycle in here. And I had been showing that the Russell could actually take out the low out in this period, and that would likely affect this cycle over here. And that's why I've had this green dash in over here, that the market was likely to pull back right there. Also, all of these resistances that are right in here, and they show up very clearly when you look here at the daily chart, you can see that we said that that was a very thick resistance band in that area. Oops, came in too tight here. And that would be likely stopping the market from moving up, especially since there was a corrective period due in here. Now, what's really interesting in here is you could see that the slim ribbon PO is still green. The slim ribbon is still green. This may neutralize right there. That might be changing. When I look here at the reversal scout, which turned up and confirmed this bottom, that's still positive, even with the market pulling back in here into this minor support area. This is still positive. So what we have now, let's keep extrapolating where we are out of this, because this is some of the evidence analysis. I'm going to use weekly and daily in 3 different indexes to come out of what really is the strongest likelihood of happening. So when I look at the S&P 500, I see positive momentum on the dominant cycle. That says that the dominant cycle is likely to put upward force in this market. And when the daily cycle bottoms, it will likely come up again. The highest probability, better than 70%, is that it will take out that high in the next move. So while the market is moving down in here and people are looking at banking issues, that might be an issue. Now let's look at the length right there. They say that, you know, the banking issues are a problem and the market is weak. But no, this is only a little bit longer than is what would be normal. Let's just look at these last 3 cycles in here. And you could see the minor cycle right in here was 14. I have that highlighted for you. The second cycle was also 14 days, so it ran 28. That was a little bit long, as you can see right over here. Now, what often happens, and especially when affected by the more dominant cycle, that will get shortened in the next cycle to get closer to what the ideal bottom would be. So this was a odd 13-day cycle right there. And then this was only 9 for 22 days. So that was a shorter cycle. Now what we have here is 16 right in here and 13 to the close right now. So that's 29 days, 29 days, 22 days, 28 days. All of them within basically normal variance. This one may be getting just a little bit long right over there. Now, that just gives you a good sense for the alignments. Now, I just want to show you this chart, which people really love when I put this up, and this is a 2-hour chart with the daily cycles overlaid on it. You can see it's almost perfect. I mean, the 2-hour chart even looks better than the daily chart does. So there's nothing unusual going on right now. As a matter of fact, the only thing that is the slightest bit unusual, and I got a lot of trolls commenting on it, was that I actually thought that the decline that came right in here on the daily chart would actually be the one that comes down into support. So I had talking about it coming down under the 4,000 level over here, but you know, the momentum from the weekly chart kept it strong, and it got one more impulse to the upside to resistance. That only left a little bit of time to correct, and you can see what's going on right now. So if there's anything that I missed on the analysis, was that the momentum was so strong that it wasn't going to give the ground right in here, but I didn't really know that. I knew the translation was swamped. I knew it was really strong. And I knew that this was not a time to be trading short. If anything, it was just get out of the way, let the correction come, and then that'll be over with. Translation and configuration positive, momentum positive on the weekly and daily. That tells you that this is strong. Now let's switch over to the Nasdaq and look at that. And we'll look at the weekly first. And here you can see is the same exact situation. It basically looks the same. You have this this market pulling down being affected by two things. The daily chart right over here, which is also coming down right into this time frame, as you can see, right on time. And the fact that the Russell is correcting and the bank issues are flaring up again right on time, and that's helping move this down. Once this is over with and that downward force is gone, and it might actually be gone right now, that would be the time that the market would be moving up again. But I have a caveat to that, and I'll show you that when I look at the Russell. And that is the Russell daily chart may be telling us that this is going to take a little bit longer to resolve. Now, here's the weekly first. Here is that 33-week cycle that we have been looking at and believing that that would be a force. This was a triangle that we've had in here that said it would likely resolve on the downside. Why is that? Well, generally, when you create a triangle, you come out of it more than a third of the time in the same direction you came in. However, if people had the reversal scout, they would really understand that it's about momentum, and the reversal scout was telling us it was likely that it would continue to go down. So that's a lot of added information. This has some time left to go in here before the bottom is done. Now you see I've added this note in here, daily cycle ideal trough, right over here. So when I go and look at the daily cycle right in here, what I'm looking at is the fact that this next daily cycle right there, that is bottoms June 5th, might actually be the low that is made in here, because this first low right over here, the ideal low, is the middle of May, and then that next cycle out over here is that June 5th period. If I look at the middle of May right over here, that doesn't line up anywhere at all. I mean, that comes out right in this area here. That doesn't make any sense for the cycle bottom to occur. What makes the most sense is that either it bottoms early and this thing gets hit hard over the next few days. The other cycles say that's not likely, or it, you know, just meanders in here, has another rally, and then comes down to June 5th. That will then lengthen out this declining phase in here on the Russell, and it will also have the S&P 500 giving you an extended period out over here where it's likely not to have its upward resumption yet. That might take you out to where this minor cycle low is over here, and this is June 5th right over here, basically on that first of the cycle timing lines. So this could be a very choppy period that we're in here as we're getting through this earnings period, and I think that would be really a period where as M. Ford says, the crazy market conditions could really continue through that period. So if I look at this cycle right over here on the daily chart, under the assumption that it does bottom in the next day or two, and then begins to move up, that next bottom is out around the end, 527, right near the end of May. The Russell is somewhere around the beginning of June. And that kind of just tells me that we're in for a continued choppiness in the market in here before it does begin to move up. That minor cycle support on the weekly could actually get tested down over here, maybe as low as That's the very bottom of that. The 618 is about, let's say, 39.50. This is 39.83. And this is 40.55, which is pretty likely to get hit in that May period. So this is just a look at how I'm really looking at putting all of that together. Conditions in the S&P 500 and the Nasdaq are positive. The momentum is positive. The cycle configurations are positive. The translations are positive. The timing is pretty much in line, though maybe running the slightest bit long. The Russell is very different. Negative momentum, negative configurations, and in negative conditions, and influencing these other indexes at that period and during this period. So that is what is really causing this market that looks like it's crazy right now to have these gyrations. The Russell had been trading very much range bound before it really started to give way and move to the downside again in here. Very effective by these low cap financial stocks that is affecting it. So what that really says is that between now and sometime end of May, beginning of June, we could still be in this period of a lot of chop, a lot of range trading, and a lot of things that maybe don't seem like they're that handicapable as we look at the sum of the evidence. But I don't actually think it's all that strange. I think it's very much in line with what we were discussing. So is my Q&A broken, or is there's not one question up there yet so far?
I don't see one. Oh, looks like one just popped up from a Zoom user.
One just came in. Okay, that's it. So you could start putting your questions in on the into the Q&A, and I'm going to turn this over to Matt.
All right, thank you, Slim. Great analysis and instruction as usual. So I'm just going to take a few minutes and give a update on the market conditions monitor and a brief demo as well. So I will share my screen. So I just, first off, I want to say that if you are a level 3 or 4 member, you have access to the base version of the MCM, which I'll describe here in just a second, the differences between our base and the premium standard, which is also available. And then we had level 4 members that were able to get grandfathered in. We had run a promotion to as long as they stayed at level 4, they would have access to the standard premium version. So we do have a few different versions out there. But what's important to note is with the standard premium version that we have out there now, that there has been several updates that have taken place, obviously, even with the base one as well. But you can expect to have about every 2 weeks or 3 at the most, a large change in functionality, some kind of enhancement or improvement. So we are going to be making sure that we notify our members when those take place. We're actually going to look to put an indicator on the market conditions like landing page where you can click it and review the updates that take place. And then in the trade planning sessions that I'll do, I'll always allude to some amount of time, whether it's 5 minutes or 15 minutes, to talk about the MCM, and then look to have some separate sessions just talking about how to maximize the MCM as a tool. So as it says here on this slide, the MCM is extremely powerful trade planning tool. It is monitoring thousands of data points, specifically looking at our 2 dependable and most utilized momentum indicators, the reversal scout and the slim ribbon. It's doing this in multiple time frames. And then what it's doing, and this is really where we've harnessed the power of our method, is it's taking multiple time frames at a specific trading style and then generating essentially a sum of the evidence or a trade setup condition based on an algorithm that we've put together that weights the 3 time frames. So I'm going to get to that in just a second. But this is not an independent buy-sell system. We want you to use this in combination with your own personal chart analysis and methodologies. This is meant to be a trade planning complementary tool. and it does one heck of a good job of two key things. One is it will help you reduce the odds of trading against primary momentum. And the great thing is you can pick a specific trading style. So whether you're an intraday trader, near-term, short-term, intermediate, or trying to learn what those various time frames, how those can fit into your style, if you're trying to branch out or test new strategies and so on, you can use the MCM to help understand what the primary momentum conditions are based on our two most dependable momentum indicators. And number two is we want you to have efficiency and effectiveness around understanding when the conditions are ripe for that next impulse wave to participate in. So essentially, the MCM is monitoring when those conditions are becoming optimal for a new impulse wave, whether that is to the downside or to the upside. Okay, so that at a high level is what the MCM is, what it's not, and what the trade planning objectives are. All right, so now I'm going to pull over the MCM and go over the major functionality enhancement or feature that was recently released. Or if you could just give me a thumbs up that you can see it. Okay, thank you. Okay, so what you'll see here is that we have 4 columns. And now on the 4th column here, we have something called, there's trade setup condition, and there is a timestamp that goes along with, and an arrow, which goes along with the trading style of your choice. So throughout the market session, we're also going to add a little indicator up here on the top. So I mentioned a different indicator which will have a version on here, which you'll be able to click and you'll be able to see what updates have taken place. And then there's also going to be basically like a data timestamp, because we have 2 data service providers. We have bar charts and we have the CBOE, and they're constantly feeding into our data engine. And this is all happening throughout the market session. So this is behind the scenes, the MCM is tracking data live. And then what it's doing is it's monitoring when changes occur. And now the new feature is in the trade setup condition. There's a timestamp to let you know when these changes happen. And also you can now sort by these trade setup conditions, and you can see when these shifts are taking place. And if you haven't used it, you should really check it out, because as you're at these key, whatever you want to call them, pivot points or shifts throughout the market session, let me just pull up as an example here, the SIR grid. And this is the SIR that we use as multiple, you have the S&P, the Nasdaq, and the Russell. It's mostly for short-term intraday traders. But the point I wanted to make is that the MCM is calculating when there are shifts occurring. So today when we opened up, and this pink represents resistance. It opened up at resistance, and then there was a pullback, and we came into support. And if you were looking for opportunities, if you felt that this was a key intraday support opportunity, you would be able to go to the MCM and you'd be able to then sort and look for those symbols on an intraday basis that were generating a bullish outputs at that time, because they would likely be already turning earlier as the market came into key support. And so that's one way to reference. And then you can see the reversal scout here in the 15 minutes started to turn up. And that's what the MCM is tracking, is when these indicators are turning. And then again, when we got up into the resistance area here, if you had indication that things were, you were looking for a shift when you saw possibly this next candle here, where we had a lower low, again, you could go to the MCM on an intraday basis and you could look for those that were setting up as, let's say, very bearish or bearish, suggesting that they were the weakest at that time and likely to have the largest pullbacks. So that I just wanted to give some use case or benchmarks around ways that you can use the MCM, and to reiterate that this is all being tracked intraday, real time, in terms of the momentum indicators. And you have the ability now to look at when these trade setup conditions are shifting around, and we give you that basically that sum of the evidence based on our algorithm. And that is for multiple time frames. Obviously, you're going to see the most changes occurring in the intraday, but then there's the near term, which is a combination of the daily, the 2 hour and 15-minute with an outlook period of something like 1 to 5 sessions. And you can click the sort. You'll start always with the default to the SPY, the Qs, and IWM. And then we have now over 120 symbols in the MCM. You can also, beyond the trader types, you also have time frames. So if you wanted to look at a specific time frame, let's just go to the 15-minute. If you're an intraday trader, that's what we typically use as our bias. You can see that there was a lot of red, and it lets you know the timestamp on when things are shifting. There's a change log too. So that's another great way to see potential ideas that may be shaping up. And if you have a portfolio where you're managing some long or short ideas, combinations of those, it's a great way to quickly be able to scan through a list and determine outcomes that are fitting your trading style and your trading needs. That's what I have here on the demo. Are there any questions, comments, anything else you wanted me to cover? Slim, I think you're on mute.
Yeah. M. Ford has an interesting question. Those timestamps would be for, he says, my specific time zone, Eastern time,
Yes.
or what are those?
Yep, those timestamps will be for your specific time zone. If you have questions on that, or if you're seeing something that doesn't seem to make sense, make sure to write me. But no, we have this set up for each. It's basically speaking to our system is speaking to your browser.
Liz says, I've noticed that timestamp. It is helpful for me to immediately hone into the time frame, which decreases my reaction time. Great feature.
Good to hear, Liz.
Thanks, Liz.
Yeah, we've had some really good comments, and you know, that's keep them coming, keep the questions coming. As I said, we're looking to have significant enhancements, new features released every 2 to 3 weeks. What's coming next is going to be for the premium version. We will have notifications that will go into Discord. So if you're not a Discord member, you're going to want to consider it. Whether or not you use the other channels that are in Discord, what we'll have in Discord is channels that will be matching up to the trader types here. So if you're an intraday trader, there is going to be a channel for intraday traders, and it will have bullish, bearish, and neutral outputs. So you'll have the ability to set your notification if you wanted to be alerted for a bullish updates or bearish updates or neutral updates. Neutral, you know, if you're an options trader and you sell premiums, you like iron condors, you know, this is a great tool to see when you have a mismatch going on between momentum, and that typically means that you have something that's range bound. So the notification system is the big one that's coming next. After that, for the premium version, we're going to be getting into our pro version, which will allow for a lot of customization. So if I wanted to have a specific notification for SPY when it went from, say, neutral to positive, and I wanted to be alerted, then that's what will be a new feature coming after the generalized notifications. The last thing I would just want to talk about is as an example here is Costco. So I was following this. I do testing throughout the day with the MCM. It is still in beta. So if you do have questions on anything that's going on, if something doesn't, as M. Ford was asking about, maybe a timestamp, or if an output isn't matching up to what seems like it would be the right output for a specific time frame or an indicator, you know, write to me, let me know on Discord, and we can take a look at it. But as I was doing this testing, and this is really, again, the power of the MCM, is if you see here, this was on 419.
I took the screen away from you. Are
Oh.
you showing something?
Yeah, I was showing something.
I thought you were done already, so
no,
you stopped.
Okay.
Yes.
Yeah, and then I remember I wanted to show this here. Is Costco up there?
Yeah. Okay,
last thing here. So with the MCM, Costco had the 2 hour went positive, went a little bit choppy, but we were positive in both the 2 hour and in the daily. So if you're a near-term or intraday trader, what the MCM is going to do is automatically shift to a condition that is very bullish once the 15-minute sends a signal. So right about here, the reversal scout went positive, and then the slim ribbon went positive, and that was probably around like 498.50. And then Costco exploded for about, what, 10 to 15 points or so. What you don't know with an impulse is the magnitude of the move necessarily. You can do some calculations using fib extension tools, but at the end of the day, you really don't know the magnitude. And so if you're disciplined with structuring yourself for trading those impulses, some of them are going to be a lot larger than others. The key is to get yourself in a position to take advantage of them when they occur. And this is just an example of what the MCM will be able to trigger to let you know that something is aligning. What it's not going to tell you is obviously how big or necessarily when to get out, but it is going to let you know when these shifts occur. Okay, I'm all done.
You sure?
Yeah. It's so exciting to talk about.
Yeah, I know. You know what's really interesting? Raise your hand if you watched the interview that they did of me that we have posted up on the site. So there's not many hands going up, a few. That's pretty interesting. One of the things that I talked about, and I want to encourage you to watch those interviews that are on there. All four of us were interviewed, so you understand, get a little background on the team. One of the questions that was asked to me, and has asked to me many times before, is, you know, you've seen the changes in the market, Slim, over the years, and, you know, how is it that you adjusted, and where are we right now? And the comment that I think is I think the most important is that, you know, when I grew up as a market maker, and we would get the edge. I would buy the bid, sell the offer. I was standing on the floor, and then the market changed, and there were we went to high frequency trading and trading in decimals and dark pools, and lots of things changed. And most of the floor traders were not able to adapt well under the environment. They had to leave the floor, and then they had no idea what to do in front of the screen. And my work really took me to looking at momentum. And that's where it's interesting that that was years ago, and that's where we are right now. That if you don't have a good handle on momentum, you are going to struggle in a big way as a trader in the market. I mean, I look at cycle analysis all the time and teach that on here, and I want everybody to know that. But embedded within that work and to really enhance it is understanding of the momentum conditions. And that really is what brought us to developing the MCM, which is there is no other tool like that in the world. And it's going to be, as you can see, developed further and giving you even more information and being able to fine tune more into what your interests are. So I think it's just absolutely fantastic. So if you haven't signed up for the MCM, I really encourage you to do that. There's going to be more specials coming down the road, but it's not expensive now anyway. So please do consider getting this MCM to really enhance your trading. All right, that's what I wanted to say about that. All right, so let's get into the questions here. We have a hard stop in 33 minutes, so we're going to cover as many of them as we can. Arlu, thanks for that. He says everybody should watch the interviews. He says they were all great. Thank you. Yeah, I really think so. They were great. Alexandra says it would be good to have a big picture view of the monthly cycles on SPX, NDX, and when is the next big leg down due? That's an interesting question. You're looking for a bearish interpretation. Somewhere down the road in coming months, I'm going to do a review of the monthly, and it's not time to do that yet. And everything that I said at the end of the year, that have and December 30th and I think January 15th, those are on our site and in YouTube. And what I said back then is still really holding very true right now. So you can see that. Anonymous wants to know on momentum, do you try to pick tops and bottoms or wait? Well, yes. I do both actually. And when I'm picking a top or a bottom, I'm doing it with a 1/4 to 1/3 position size. I'm never going to enter with a size that's going to have a potential psychological reaction to the position and get me off of my analytical game plan. It's fine to anticipate a little bit. When you're wrong, you have to wait. When you're right, you can add. And that's really the importance. And adding is very, very important to your success. You should be trading in sizes that when you're right, you can increase the size of the position. And that's one of the real important tools to successful trading. There's a question on here that I don't understand. Well, it's from Felipe. It says, how can I become a member? Is Matt, is there anybody, was this open to non-members?
I don't believe so. I think it should have went out to just our premium members.
Well, maybe somebody shared a link or something.
See?
So Felipe, go to askSlim.com or write to Matt at askSlim.com and you can learn
Sure.
about our memberships. That was a surprise to me.
Mm-hmm.
And Alexander says, we are all in awe and just absorbing all of the incredible info Sensei Slim is sharing with us. That was when there were no questions up there at all. So she said that what was going on. Basically, I had everybody stunned is what she's saying. So that was a great comment. The Zoom user says, so we'll be turning back up in SPY to or will we be turning back up in SPY to 411 in the daily in the next few days? You should go back and watch that analysis in SPX, which I covered, and that will then give you the answer to what I believe in there. And just, a quick summary, I said I thought we would be in a range right now. I see a question on FCX coming up for one of you two. Liz says that was illuminating on the SPX and Russell. And will you review NASDAQ in detail as well? I did do the NASDAQ in there. You might have missed that, Liz, so you can go back and watch the review. We have a question on Bitcoin, which I'll get to. Slim, is your analysis of SPX and RUT also in line with VIX? I'd appreciate it if you look at the VIX. Why don't I do that right now? The VIX analysis is not thrilling me at the moment. I'll tell you that. Because it's a little bit off, and I've got some overlays in here of other analysis. An analysis came in from Michael M on a 20 and 40 week cycle, and that's that blue dashed overlay in there, and that does look really good. So I have it in there right now. The way these align, though, is that there's trough in the VIX out over here sometime in coming out to early May, June. That does not align well with the analysis that I just shared with you. So I got to tell you, I'm confused on the VIX and how that really is going to line up with our analysis on the market. It looks like the trough in the VIX will come sometime in this May, June period, but we're also looking for range bound trading in there. So I'm not exactly sure how that's going to affect it. And then after the range bound trading, I really don't see, you see where this big, where this low is right over here, that's on, let me just get the bigger arrow on here. This right over here comes down to the August, third week of August. This bigger one from Michael M comes down into October. Those say to me that the high in the stock market probably is not going to come in this year into that August through October period. So late in the second quarter or third quarter, before these ultimate troughs are made, there's likely going to be some very choppy period with higher with market chopping and declines with a higher VIX that comes into this period here into June and potentially July. But that doesn't mean you'll have any real big steep decline in the market. This could just get you up to 2021 again and then come down. So I don't have a really good handle on that. The daily chart, it's been really good up until this moment. You can really see the cycle alignments in there that have been really great. And I think they've really keyed me into the market very well. Got to ask whether or not there was some important bottom in here as the VIX started to move up. But at the same time, we're looking for the market to begin a rebound in a matter of days, at least temporarily. That could bring the VIX right back down here again and make the alignment that we're looking at here correct. So I can't give you any brilliant analysis right now in the VIX. I just don't have a good feel for it. And how it aligns with the market and these overlapping cycles that I'm looking at. And I hate bringing you analysis that I'm not that certain on, but I just don't think that I can give you something in there that makes a lot of sense right now. I'm hoping that in coming weeks, it will make a lot more sense than that, which I just showed you just now.
Slim, excuse me. We had a member on Discord write and wanted to see if we had any comments on this. There's a new instrument, VIX instrument. I don't know if all of us, Arvi, Slim, Katie, are familiar with this VIX 1D. Has anyone looked at that, evaluated that yet?
No.
Okay.
I haven't at all.
Yeah, I'm not sure about that one.
You know,
All
my
right.
brain can only hold so many symbols, so something has to
Yeah.
go out of business before I let another one come in.
Yeah. All right, I'll let them know.
Yeah, sorry, I don't have anything on that.
Okay.
We have a question here on Bitcoin, which I'll bring you that in just a second. GDX gold. Alexander says a big expiration is coming on May 19th. Quite in time with the cycle low that we're looking at. It's always interesting to see what the trigger is and why knowing already the cycle movements. Yeah, it's true. You know, just like we said, the banking issue came in right now when we think the Russell would be going down, and that is happening. Another question in here on gold and silver. This is interesting. It would be great to be able to access the graphics via the MCM for members that cannot use Thinkorswim. So the MCM is not on Thinkorswim. I mean, we do have our indicators on there, but basically the MCM is analyzing all of that for you. So
right.
you know, there may be someday that those indicators are available elsewhere, and the slim ribbon is actually available elsewhere. You can use that on TradingView or Wealth 365 charts, or on Tasty Trade. It's available on all of those if you want to put the slim ribbon up on there. But the MCM just does a miraculous job of analyzing that for you. JK says, I'm learning your guys' methodologies as I joined as a member just a few weeks ago. So it might be a dumb question. There are none of those. When the 2-hour MCM flips, let's say to negative, from negative to positive, does that mean the reversal scout is going to reverse at the same time, before or later? Matt?
Well, JK, I would suggest you can come to the trade planning session tomorrow. We can go in more detail. But if you're just learning it, I would stick with the trade planning or the trade setup condition output rather than a single time frame. The MCM outputs, if you're talking about a 2-hour, it's measuring actually the reversal scout. So if you're looking at the reversal scout output on the 2-hour and it says it's negative, then that means that the reversal scout shifted negative. It shifts back to positive, then it's the reversal scout shifting positive. So it's mirroring, those outputs are mirroring what the reversal scout is doing based on the data that we're getting fed. But if you're wanting to better understand the condition, I would say look at the trade setup condition output, because it's a sum of the multiple time frames and giving you what that output is, the overall condition.
Good. I see for Katie and Arvi, there is Snap, GM, ITB. I don't know what that is.
Yeah, I think we have some work on ITB, so Katie will do that one, but we don't have anything on Snap. We do have GM though. So
Mhm. John Monty wants to know, is your momentum indicator like the Hull indicator that you use? Yes, it's actually quite similar to the Hull moving average. It's a weighted moving average that is a little bit different than the Hull moving average, but there are a lot of similarities to that. Alexander says, sometimes daily cycles are shorter, and in effect, they will change the weekly and monthly cycles. Do you adjust the bigger cycles or just the minor daily cycles? Actually, I believe you have that upside down. It is the more dominant cycles that affect the shorter cycles. So first of all, the daily cycles will tend to shorten when they're bullish because the buyers are anxious. The daily cycles will tend to lengthen when the momentum in the weekly or the monthly is negative because the sellers just don't go away because the prices keep falling. So they tend to get a little bit longer on the way down. They tend to shorten on the way up. And this is the more dominant cycles on the longer time frames that are affecting the shorter ones. David says for SPX and Nasdaq, it sounds like a temporary lift over the next few days and likely a fall back into May, but mostly chop. Is that what you're saying? Well, that is exactly what I was saying. Do you have a tutorial for using your charts on TradingView or Tasty somewhere? Actually, I was only talking about the indicator, the slim ribbon, and we have a tutorial for the slim ribbon on our website. So you can see that by going, I forgot where it is. Matt, where is it on the website?
Yeah, it's under resources.
Resources, okay.
Yeah.
And a question about Disney. Matt, do you have any membership levels offer the MCM notifications, SMS notifications? And if then that coding for triggering real-time changes in the Scout or Slim Ribbon indicators?
We don't have SMS notifications. The first step in notifications will be via Discord. However, if you are connected to Discord through your phone, you will also get that notification through your phone. So that will be the best way to have an SMS-like notification. And the MCM will have in the Pro version, which is yet to be released, the ability to set custom alerts on symbols and indicators.
Good, okay. All right, so let's get into some of these charts so that we can get some of them done on time. My questions are gold, silver, Bitcoin. I'll do those first. Let's switch over to the charts. First thing is Bitcoin. Interesting day in Bitcoin today, as a lot of the buyers scrambled, or a lot of the shorts scrambled, as they were looking at the news that came out of First Republic Bank and thinking that, well, it's really time to get back in this before they miss the giant rally, and they bid it all the way up to 30,000, and then it fell 1,600 points after that, finishing up 800, which was still a good day, but overall not ready to get a rally going. And as you could see in these cyclical patterns, these patterns are actually pretty right now. As let's just look at the weekly right over here, and we'll look at two of these dominant patterns here on the daily. So of course, this pattern right over here on the daily, as you can see, is made up of two minor cycles. The dashed line is Ethereum, which is actually lining up very well right now. And you can see the minor cycle right over here, and then the next minor cycle here. Now, let's talk about a few things. First of all, you can see that the configuration of this cycle on the weekly, which actually matches this dominant cycle here in the daily, was positive. You can see the support here on the weekly, which was brought over here, and it bottomed right there, right on time, and then began to move up. So exquisite when you look at that. The momentum, which had turned bearish right in here, you could see the slim ribbon PO turning neutral, and then the slim ribbon, that green arrow, saying it was positive again. When that came right over there, also the reversal scout turned up positive. When you have weekly and daily positive conditions, you have a set up for an upward impulse, and that's what happened. It got up above even this fib extension area and then failed right in there, and then began to chop here these lists last month. This big red bar you see right over there is actually a perfect engulfing pattern in Ethereum, which says to me that this was a pretty important topping area. When you look right here at that daily chart, this has got very important information. And that says that this is really where the low was on the minor cycle right there. And then it rallied as it was supposed to, got up near that fib extension, and then came out and took out this low. This was very out of place to rally like that. And that said to me, it would likely fail, which you saw happen most of the day today. The real low timing comes right in here, which is in between these two cycle timing lines, which comes, the ideal low is like right in the middle, about 5/11, May 11th. And then we get into the next rising phase. Assuming that this momentum stays strong, and with this configuration being positive, that would then have us extending this out to the likelihood that it comes up and tries to test these highs again right over there. That would be the likelihood, the greatest probability that comes out of the sum of the evidence. Still, it might have a very hard time up at that 3,100. We had projected here that it would get up to this area potentially of 31.4 to 32.5, with an outside chance of getting up to that major 38% at around 35.7. So right now, it's just in a choppy corrective period, likely to see lower prices before it sees higher prices. That is a look at the Bitcoin market. Also had a question about gold and silver. I want to show you this first because I always like to say to people that are students of our work, this is a monthly chart in, well, that was a monthly chart in silver. Where did it go now? Let me just get that back. That is a monthly chart right there in silver. So when you look at that monthly chart in silver and you see the dominant cycle right in here, bottoming here, the intermediate cycle bottoming here, the minor cycle bottoming here and nesting, and now you're about 7 months off of that low, well, what does it tell you? I mean, if you think this is bearish, raise your hand. So no hands are going up. If you think this is bullish, raise your hand. So tons of hands going up. Of course, I've got lines that are drawn that says up, so that does help you. But yes, this is a bullish condition under the monthly pattern. If you look at the gold market, we just get the gold analysis on there for the monthly. Well, looks pretty similar, doesn't it? And of course, our projections are for all-time highs here in the gold market. So when I do my analysis and share this with you, I remember that I have a bias that comes out of the most dominant cycles that I look at, which is in the monthly. So here's a look at the silver right over here, and that's the wrong one. We did that one, and this one right here. And you can see that, well, we may be entering into a corrective period in here. When I look at the daily chart, it really says to me, well, maybe not yet. There's some overlapping cycles in here that we're looking at, but kind of in a corrective period right over here. But then when that's over with, I think it is going to be beginning to move up. After that, this is the silver market, as you can see, where I think that after that corrective period, which probably comes out into the early part of May, it will begin to move up again and test that 26 level there. The gold market, I actually have a in a shopping cart in one of the gold sites that I like to buy things at. I have another batch of physical gold loaded in there to buy, and I actually wanted to push the button when it got down into this, under this area right over here at 1975. So I have the physical gold trigger loaded when it gets down into this area to buy, because I think it's going to go up here again. And I actually think gold is easily going to make 2150 this year, and with the potential of much, much higher prices later on, because I'm very bearish in the dollar, and I think gold is going to do great under that scenario. But in the meantime, we're in a corrective process right over here. I don't sell this market. It has strong upside momentum here. It has strong monthly patterns, strong upside momentum in monthly. And you can see in here on the daily, it is just neutralized. You can see that blue arrow down over there. You see the slim ribbon just touching right over here. And look at all these patterns, all these arrows right over here that said upside resumption, upside resumption, upside resumption. All of those things telling you that the momentum conditions were very strong. So you would only be a buyer under those conditions. And now you could just wait and look for the highest probabilities, which would be, you know, another dip maybe over the next week or two, and then the potential for another shot up towards 2100 there in the gold market. So hope that was really clear to you. The anonymous attendee asked about GDX, and they're expected to move up in the next daily cycle, and you see that example in here. However, the stock index are expected to move down during the same time frame. If stocks move down, would this imply a move in the dollar and yields and be bearish for gold? So those are really good questions about correlations. And I did a piece on this last Friday in Market Week, and the correlations are not exactly holding up to what I thought they would. Still, the dollar tried to move up again, which is what I thought would happen. You have a good point about that. If the stock market gets hit hard, the dollar is likely to move up in a flight to safety. The gold market would then start to move down. But everything I'm showing you is pretty much in alignment with that anyway. Gold can move down over the next couple of weeks while the stock market gets an upward blip. Or the stock market could just be trading in a range, and then gold will trade in a range and then all of a sudden begin to move up again as the dollar starts to get a little bit sloppy. You don't need to have a lot of movement to get these things moving the way that they're expected to move in the cyclical pattern. So we're running really short on time. And Chuck says, is the Bitcoin chart available on level 1? No, it is not. You could see it in level 2 in FutureSpeak, and then you can have access to it in level 3 and level 4. All right, I'm going to turn this over to the two of you to do the few charts that we have up there, and then we're going to do this hard stop in just about 9 minutes.
All right, Slim, thanks so much. Let me go ahead and pull up Freeport. I'll look at Freeport and TSLA, and then Katie will look at ITB, and then what's the other one, Katie?
General Motors.
General Motors. Okay. All right. So let's go ahead and pull up Freeport again. Freeport certainly weak, giving us some signs that a high has formed early here, and we're looking for this to actually lose that 78.6 on the downside at 36.69. If that were to happen, it would really raise the odds that the high has formed early. Now, this low is only due out in the fall of this year, so it would certainly be very negative if we lose that level. So we're just really watching to see if that were to happen, but so far not a great move off of a low back in mid-March. If we go ahead and shift over to the daily chart, look at this very sharp selling after earnings here as well. And what we're watching for now is for a low to form, 419 to 427, and then for a move on the upside up to around 39.5 to around 40.96 or so. So we'll be watching to see how it acts as it gets up into these zones. On the upside, if we go ahead and shift over to TSLA, also has likely formed a key intermediate term high. Let's pull up the weekly chart. You can see this has clearly failed versus 209.75, turned back to the downside. We have a low that's only due 626 to 87. So we'd only look for lower highs and lower lows to form here in TSLA, and we are looking for a move down to that 78.6 around 126.78, and we are currently trading 153.75 as of the close of the US session. If we go ahead and move over to the short-term pattern, also early high that formed. Let me see if I can modify this quickly. You can see this a little bit clearer. So early high that formed here went sideways, very, very weak. And then we lost this old low at 176, at 176, which says that this high formed early once more. And so far, look what we've seen. Every rally has failed post earnings. So we are still looking for that to happen and for this to work its way down into that 61.8 at around 145.89. There's a short-term low that's due 511 to 523. Let me also show DIS. I know that was one of the other ones that was on there. Let's pull up the weekly chart. Also not acting very well. So we have a series of lower cycle highs or lower cycle lows throughout this whole time period, and each of these has led to new lows. So you can see lower cycle lows throughout this whole time period, lower cycle highs throughout this whole time period. We are still doing that. So we are looking for a move back down to this old low at 84.07 into this low, which is due 612 to 724. So you can see we are even right now failing around this zone from 101.14 to 107.52. If we go ahead and shift over to the daily chart, also seeing that same sign of failure right there. Okay, you can see that turning down, looking for a move in the short term down to that 78.6 at around 92.92. This old low at 90.46. There is obviously earnings. Looks like around 5.9 or 5.10 after hours. It looks like 5.10 after hours. So watching, obviously, nobody knows what's going to happen on earnings, but we are watching for this to overall trade down into late May. There is a short-term cycle that is due 5.18 to 5.30, very much in line with that of the S&P 500. And we'll go ahead and hand this over to Katie.
Okay, let me share my screen. Are you able to see General Motors? Yeah.
Yep.
Okay, great. So let's just focus on this last cycle right here. This candle that we're actually experiencing this week is an important one. We don't know how it's going to close, but as of right now, it has broken through this very important cycle low support. We have these very beautiful regular 24 bar cycles. So putting the projection now down to this area between this prior cycle low support and the intermediate 127.2% fib. So if it got a little bounce back up into this resistance zone, that would be a good selling opportunity. We have a timing window coming up May 22nd to June 30th. We have negative momentum with our reversal scout, so this looks pretty bearish at the moment. Switching over to the daily chart, I really didn't have anything in here, so I put some stuff in, and these are 34 bar cycles that I would like to shorten up by one just to make them line up a little bit better. But if I do that, then that puts this candle outside of the timing window. However, this could be the low with a little 2-day rally and then a breakdown already. We will have to see if we can get a little bounce to take this out, and that will make, this or a subsequent candle the low, and any bounce here would be a good selling opportunity. Let's switch to ITB, I believe it was. Okay, iShares US Home Construction ETF. So these are pretty regular cycles as well, 37 bars. We are moving up. I've targeted this intermediate 50% fib extension level at 78.22 as a first step. If it gets through there, then we can get to 81 to 85. We've got this upturn in momentum with the reversal scout now, just a few weeks off of the low. Switching over to the daily chart. You can see we had our cycle low back here. We've got good momentum, positive reversal scout, positive slim ribbon, got just up above this 61.8% fib extension level, backing off from there now. This support zone runs from 71.42 on the top to 69.08 on the bottom. We have this timing window out in early May, 5.10 to 5.18. Depending on the kind of retracement we get here, could set up a good upside move into the next cycle.
Great. All right, Slim, that's all we have.
That's it. Okay, great. Let me take this back over. All right, that's going to wrap us up. Got out of here at 5:30, which is great. If there was, I know there was some questions that we missed in there. Sorry for that. If anybody then has a, if you're level 3 or 4, you can write us the questions. If your questions are about anything in the SIR or the MCM or any of that, make sure you write those to Matt. All right, great show, everybody. I'm thrilled that we had people here on Wednesday, and really wondering how some people that person that was not a member actually got in here. So I hope they become a member. All right,
Signing off, right?
Great show, guys.
signing
Thank
off.
you for
everybody.
participating.
Okay,
Yep. All right.
bye-bye.
Bye-bye.